but we buy and sell money. And the government is, we talk about inflation and we look at like personal consumption expenditure and CPI and PPI and all these things, but we don't talk about a lot is our debt and deficit is highly inflationary.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Starting to get my Monday video out to you, and it is Wednesday because we had the California Mortgage Banker Association, the Western Secondary, which is a fantastic show. So if you didn't make it, and I understand some of you might have been on Southwest Airlines and had a flight canceled on Sunday because of Tropical Storm Hillary that came through, but there were 650 attendees. It was really well attended. The golf tournament Monday morning took place. So kudos to the entire team at the CMBA. Susan Milazzo, she's amazing as a CEO, and it's a really well-run board, and I'm on it for the first time this year on the board of directors. So it was very cool to have a board meeting on Sunday and then all the meetings and all the craziness. So here we are trying to get my one and only video for the week because I slacked. My bad. Okay, pain will be felt from the bottom up, and a trillion. So there's some things we're going to talk about. But before I get into those things, there are some housing data that came out this week. So we had new home sales and existing home sales. And as you know, existing home sales is typically a higher percentage, 90, 92%, maybe even 93% of all homes sold. It's 85%. And I think the number for new home sales was 4 million, like 4 million and 5,000, I think is what it was. If I can find you some numbers here. And 714,000 annual rate of new home sales. So new home sales are picking up. So yeah, 4.07 million on the existing, just to be exact. So that dynamic continues. And the other dynamic that continues, I think the Fed is worried about so much, is they're trying to sell like $1 trillion in treasuries and fund our government. And so there was a 20-year auction that happened today, and it was a little less than average. And so these are factors that impact money, because remember, we buy and sell money. I know it's the American dream. We love putting people in homes and building our communities together. That's the fun part of it. But we buy and sell money. And the government is, we talk about inflation and we look at like personal consumption expenditure and CPI and PPI and all these things, but we don't talk about a lot is our debt and deficit is highly inflationary. So, we talk about the bondinistas, bond vigilantes, and we talk about debt, we talk about money. It requires a lot of money to run this government. We're the biggest economy in the world, and we are a debtor nation, and we use the word trillion like a whole lot. We're something like 32, 33 trillion in debt. And with higher interest rates, then 2/3 of our payments are going to line private pockets who are bondholders that get the interest that we pay to fund our government. That's inflationary. So it's not just, is rent coming down or housing costs coming down, which they're not. They've slowed their growth, but they're still growing at over 5% appreciation. We know rates are high, and the Fed is saying they're going to keep it higher for longer because they feel that the inflation is sticky. And, we have all this liquidity, all this money in the system from years ago that is sticking around longer. That's the longer part of the higher for longer. So we have to deleverage and work that down to fight inflation. It doesn't help that we have a poor 30-year bond auction and a 20-year note auction this year. So today. So anyway, I read something else that I thought was interesting. 2.1 trillion. Okay, it's another trillion number there. 2.1 trillion is how much, according to our boy Elliot Eisenberg, the bow tie economist, how much Americans saved above and beyond their normal savings because of stimulus checks and their inability to travel. And so we're down to about 200 billion of that left. But I thought it was interesting. So, there's all these trillion numbers getting thrown around. Speaking of trillions, I read that most of the cash, the corporate cash, is with the top 10 companies on the S&P 500. Well, NVIDIA reported today. And NVIDIA is kind of a bellwether. It's one of the 7 stocks, certainly one of the top 10, that's been holding up the stock market. They crushed earnings. They crushed it. So obviously they're not in a housing recession like we are. It was interesting. They're supposed to do like a dollar earning. They did like a dollar, over $1.07 earning per share in Q1, and then they were estimating to get over $2 in this Q2 earnings report today, and they were like 260 or 270, 88% earnings increase in 3 months. I mean, think about running that. Like they're having their refi boom, like we all did in 2020 and 2021. Like the savings from stimmy checks came out. So semiconductors are still running hot, and if that is a bellwether sign, that stock market may rip a little bit tomorrow. But then, of course, Jerome Powell speaks on Friday from Jackson Hole. It's kind of a big deal. He could throw some water on this little fire here that got lit by NVIDIA. Maybe some people are going to take some profit off the table. I don't know. I'm not a financial advisor. I'm not responsible for your profits. I'm not responsible for your losses, only your profits. So after NVIDIA reported, we will see what happened tomorrow when the market officially opens. Those of us that don't get to trade after market like the big guys. All right. A couple banks got downgraded. All right. A couple banks got downgraded. So that's in the news. There is, again, with all this corporate cash, these higher companies, pain is being felt from the bottom up. So if you are a smaller bank or a regional bank, and you're not JP Morgan Chase with $1 trillion in cash and cash equivalent assets, then when pain comes from higher rates, which is what the Fed wants, it gets felt from the bottom up. Our business the same way. At the California's MBA Western Secondary, there was a session on M&A, mergers and acquisitions. And there was 50 M&A deals last year. There were 30 already, I believe, year to date or through June was what they said on stage yesterday. And so if you've got $5 million in cash or $2 million in cash or $1 million in cash and you're burning through it, you're going to feel that pain from the bottom up, as opposed to maybe some of the bigger lenders in business who have 100 million, 200 million, 300 million, billion in cash sitting there, getting through the tough time. That's why M&As happen. So same thing with balance sheets. The little person always gets hurt. They can't afford houses right now. Can't afford the down payment. They are getting hurt. They're getting left behind. I saw an article in Housing Wire. Ted Tozer had a great suggestion. There's all this surplus in cash with the HUD fund. Why not do 100% financing for FHA loans? If it's so hard to save up and get into a deal, we don't really care, right, where the money comes. You really care where the money comes from to get into the deal. What matters is, do they cash flow and can they make the payment along the way? And again, pain is felt from the bottom up. The jobs get lost out there. They're typically jobs when the job loss recession comes, whenever it comes, if it ever comes. People are saying it's not going to happen. It's not going to come. It usually happens with lower educated jobs. So pain is felt from the bottom up, and all these $1 trillion numbers around here. So let's talk about semiconductor chips. Gelsinger is the CEO of Intel, and he said that when we passed the CHIPS Act, that was the most important legislative piece since World War II. Let that sink in. And I mentioned on a video a week or two ago how much OpEx is up, operating investment by companies, $900 billion. And this CHIPS Act has helped spur that. So by the end of the decade, Intel aims to deliver chips containing 1 trillion transistors each. There's that trillion again. And then also today, Jensen Huang, the CEO of NVIDIA that crushed it, he said the world has something along the lines of $1 trillion worth of data centers installed in the cloud, enterprise and otherwise. The $1 trillion of data centers are in the process of transitioning into accelerated computing and generative AI. And how's that going to happen? With chips from NVIDIA. So speaking of trillion, I think the SEC was trying to get some new rules to get transparency and fairness and accountability as it relates to venture capital, which is a $20 trillion market. So about 3 years ago, I talked about the difference between a million, billion, and a trillion. Look it up. You could do your Google, look up on a video or YouTube or something like that. It's pretty interesting, all the different analogies out there. All right. So watch out for Jackson Hole, watch the stock market rip, and then people sell the rip. And then who knows, maybe they'll buy the dip. The stock market's in an uptrend until it isn't. And right now, housing, we're just grinding through the deals right now. Super positive, though, coming out of the Western Secondary. A lot of great conversations, lots of stuff going on. I was really proud to be part of that organization. So everyone have a great week, and I'll catch you next week. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.